Hello everybody, welcome to my channel. Today I want to share with you guys something that just came out. It's something about margin, and this could potentially send the stock market to the moon very soon, probably within the next 30 days. So let's go ahead and take a look at it and see what it is. So these are the FINRA statistics that show the margin that we as investors have in the stock market. If you don't know what margin is the money that your broker lets you borrow so you can trade. I don't know, maybe you have at some point you have gotten a message from your broker saying that you can borrow up to $5,000 or $10,000, whatever. So the people that use that money go into margin. And as 2021 went by, since the beginning of the pandemic, we started seeing an increase on margin. So this right here, is last year on 2020, and as you guys can see, we just started going up, 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 and up since March. After March, when we had the big dip on the market, everybody started going on margin, and the numbers just started going up and up every single month. But right now, we started seeing a decrease on margin. We went from almost 800 billion to almost 900 billion right here. But now we're starting to go down. And we're almost at the end of the month. So in August, if this shows even lower, say that it drops another 10 or maybe goes under 800, that's just going to be a potential cataclysm for the stock market at some point, because more people are holding onto cash and they're not going on margin anymore. So when people don't go on margin, whatever profits they make, they don't have to pay anybody off. And usually that's how you want to go about the stock market. You know, you don't want to be owing money, because if a trade goes bad, then you lose a lot of money. But right now we're starting to see that people are just holding on to cash and, you know, saving for whatever could happen, paying off their margin, and just doing what's best. And what is best is to not have any kind of debt when it comes to your securities. It's good to try to play with more money, you know, because we all don't have enough money to make these big profits every day. But once you pay off your margin, you just become 100 times more safe with your investments. So we went from 800 million, from close to 800 million to almost 900 billion. So we went from almost 800 billion to almost 900 billion through this year. But now we're starting to see the number going down. And this is really good for everybody, because I don't know if you guys saw my video from yesterday when I talked to you guys about that banks are holding on to cash. We're at record highs of how much cash banks are holding, and now that we're seeing that customers, brokers are paying down their debt, their margin, they're going into less margin. This is just amazing, because if opportunities start coming up on the stock market, like, everything should just go to the moon, or whatever sector gets affected by this. And by affected, it's going to be affected in the good way. So it's going to the moon. Whatever sector it is, it could be tech, it could be recovery, it could be anything. So I wish I could open this article myself, so I don't have to be putting people in the video, but I don't have access to the Financial Times news article. So as you guys can see, this is the Financial Times webpage, and they pretty much created an article on what I'm talking to you guys about. And as you guys can read it right there, investors in the US have started to dial back their usage of leverage for the first time since financial markets were rattled by coronavirus. So this whole article just goes on to talking about how everybody as investors went into a lot of margin, but now for the first time since everything started, margin is starting to go down, and that's incredible. That's just incredible because this big bubble that we keep hearing about or talking about, that all the bubble's about to pop and you shouldn't invest right now, or this is a bad time to go into the stock market because everything is really overpriced, or whatever thing you have heard out there from people that are not investing. Because usually you hear things like that from people that are not investing. Like the people who don't invest their money are the ones who be giving you advice on why you shouldn't invest. That's everything for today, you guys. Go and check out this guy. His name's Meet Kevin. Just look up Meet Kevin on YouTube. He's an amazing YouTuber. I love his
Investors
content.
Bar, we just saw the
I'm
numbers
subscribed
here.
to him.
Separate data from Goldman
almost every
Sachs,
single one of his
which
videos,
runs one of the
maybe,
largest
if not
prime
all of
brokerages
them.
in the world, showed that investment
But
banks' hedge fund
yeah,
clients
thank
had
you guys so much
cut
for watching,
both
and
net
let me
and
know
gross
if
leverage
you
in
found
recent
this video
weeks.
helpful.
That's awesome.